Good afternoon, everyone, and welcome back. This is Daily Trade Analysis with a quick market update for today, Monday, 26th of June. I'm back from vacation last week, so we are going to, apart from reviewing today's economic data and technical analysis, I'm going to perform a weekly review of last week's performance overall, quite quick for you to really understand where we are right now on the weeklies and on the daily and what to expect from the Nasdaq and from the S&Ps in the upcoming weeks. First, today we didn't have a lot of economic data. We only had Dallas Fed Manufacturing Index for June. We were at minus 29 and the previous one we were expecting slightly lower, but we got better than expected. Not super good, but still better than expected. This didn't impact a lot the markets. We should be waiting for some more important news like Powell's speech on Wednesday and also tomorrow, new home sales, house price index, consumer confidence, and all things like that. But this 1030 manufacturing index moved a little bit the markets, and we are going to see that on the charts right now. So let's first start with the Nasdaq, as always, on the daily, where we are right now. So basically, we were expecting the 61.8 fib retracement on the Nasdaq around 14,800. These blue dot lines, upper and lower, these are the weekly range, last week high and last week low that we are more or less today we are crossing. We are going to see that on the 30-minute chart more clearly, but overall on the daily we are expecting a pullback around 14,800 for a complete 61.8 retracement, Fibonacci retracement. That was the plan, to continue seeing higher lows and higher highs and jumping this trend and expecting big players also to continue higher. That was the plan. On the S&Ps, we are also expecting this kind of thing, but if we check the fib retracement, as you can see, we are already there. We are around 43.73. We are at 61.8 retracement. We don't want, on the S&Ps, we don't want to enter again and to retrace again in this range that we broke on early June. We push 4-5 days in a row and we are now pulling back. There's not a lot of outflows on the S&Ps, not on the Nasdaq, but overall, all people that are still long, are still bullish, are watching levels for a nice pullback. That being said, last week we had a problem, a really bad problem with financials. Financials took a hit last week. Let me change this to where it is. Here. So from here to here, we got XLF got 3.90% in the negative. And basically Goldman Sachs, Morgan Stanley, JP Morgan, Goldman Sachs took a big minus 8% in 5 days last week. So financials are really not performing as expected. We have XLK technology pushing higher. We have consumer discretionary following that push. We have energy in the bottom of the barrel. This is defensive. We have also XLU defensive at the lower end, staples defensives and healthcare defensives also trading sideways within a range. So, but XLF financials is a big important sector. And that was the problem last week due to regulations coming from the Fed. The minimum amount of capital that Fed is requiring, is trying to regulate in these regional and big banks, is certainly hitting XLF and big banks. And that's why I think we are seeing a little bit more than a pullback than expected. If we go to the 30-minute chart, or even better, the 1 minute chart, as you can see, this was an ascending triangle into the last week low. 15,000 was lost today. That was pre-market low. And basically we are breaking down this last week low and breaking down the support on the descending triangle. And I think all eyes are being watched into this white rectangle that it's coming from the daily range that we broke out on early June. We don't want the Nasdaq to really push higher and then reject and enter again into this range, into this value. We want the field retracement to hold. We want the upper part of the range that we broke out to hold, and then maybe in the upcoming days we can see higher. We don't want to stay down here. So let's see what happens today and tomorrow ahead of Powell's speech on Wednesday, because right now it's a little bit tricky if we are really seeing weakness or if we are seeing a pullback, a mild pullback that everyone is watching for support and for buying in, jumping in again to continue the trend higher. It all depends on financials. If we check the financials today, it's basically quite in the green, but the big banks are not in the green. XLF, it's 0.06, barely flat. Energy is flying, utilities is flying, and consumer discretionary and XLK are really not pushing, because basically all the Nasdaq is red. Right now, if we check the 1 minute chart, see what we got into the open, we push higher, we started grinding. I don't like this kind of grinding higher candle after candle because there's no structure to mitigate risk. So basically my level was this purple line that is Friday's high. We check the 2 hour, we can see, let's go to the 15 minutes to see more granular. This was the level that I was watching. First, the close of this candle, that was the high of the day on Friday, and we rejected that and we started going lower. Inverting the trend, really consolidating up here, rejecting point of control, and then starting doing an active trend lower. That we are now, basically, we are getting value under last week low. 14,964 was last week low, and we are getting there. We are doing lower highs below this value, and as you can see, it's lower highs, lower lows, active trend to the downside, and right now almost 1% in the red for the Nasdaq. Tesla is minus 4.87, minus 5% almost, because it was downgraded by a third bank. It was first JP Morgan, now is Morgan Stanley, that is also downgrading from buy to neutral, and it's really hurting. But look at this gap. I think Tesla is willing to fill this gap, and I don't think Tesla is going to retrace that much. I think we are going to fill this gap and continue higher towards 300. That's my opinion. I don't think a downgrade from buy to neutral after this huge move is that big of a deal. So I still think Tesla lovers have a big opportunity to gap fill continuation, healthy pullback, and the final target is 300 basically. But for now, Tesla is seeing a lot of selling pressure. Look at this, it's being smashed. Also Amazon minus 1%. All these two is XLY, consumer discretionary. That's why XLY is seeing a lot of red. Nvidia also rejecting, continuation higher. Look at this, the pivot that we got on all-time highs around 420 is now being rejected. And let's see what happens, because we are not seeing only S&P weakness, but a Nasdaq weakness, but also overall weakness on the S&Ps due to these financials that are feeling the pressure on the regulations. More things that caught my attention last week, and we are seeing continuation. Dollar bounced off the trend line, bounce of support, previous resistance is now support. I think this pullback and this higher low is being respected, and as you can see, if we check the 30-minute chart, we are seeing some push higher and consolidation. This is healthy price action, still in the red dollar today, but if we check the other convergences with this price action, we have Russell really rejecting, pulling back more than expected, and Bitcoin pushing higher and consolidating here. So Bitcoin is really pushing the deal of risk on, but Russell is not following suit because basically yields are still pushing, are still holding, and there's still a possibility for markets to, even though they already priced in the 25 basis points on 26th of July meeting with 77% of probability. If we check the rest of the probabilities, markets are not pricing in a second rate hike in September. That's what the Fed warned us in the last week and during FOMC interest rate decisions and projections for economic projections. So basically markets are pricing in this 25 basis points hike, but not another hike. So we have to really pay a lot of attention to upcoming economic data, because if we don't see continuation to the downside on key indicators of inflation, basically the market we reassess, and most probably we might see an increase of probabilities for the second 25 basis points in September, and markets will for sure see a lot of selling pressure to that. And as you can see, 2023 is expecting one more hike to reach 525, 550, and then hold for longer and start cutting rates as soon as January of 2024. That's what markets are pricing in. But remember that the Fed is not planning to do that. Gold is buying this kind of thing, but as you can see, we are doing lower highs, lower lows, and we are actually rejecting 2000 that we try to recoup here, and this level of support around 1940. We are now for sure, this is not the plan. I think we are going to see the next level of support around this weakness down here around 1875 or something like that. The fib retracement and this trend is no longer valid, but we are in an active downtrend, trying to find some kind of support somewhere. Remember that gold does not like higher interest rates, so is basically contrarian, divergent with the dollar, and also with higher interest rates and risk of assets. So basically, if dollar is pushing higher, trying to consolidate as we are trying to see here, putting a higher low on this trend, starting to build some kind of momentum on the trend, gold is seeing the opposite. Dr. Copper is rejecting this push and is basically quite volatile, but looking at the price action and this huge rejection is looking weak. Silver is 2%, but as you can see, it already resolved to the downside this bear flag on the daily, and we touch the 61.8 retracement, and we are seeing some kind of a bounce. Let's see if we see continuation on this trend to the downside, because silver, metals, gold seeing weakness, financials not following. I think Nasdaq might get in a little bit of trouble if we don't start getting some beats on and some good economic data. We are seeing continuation from last week weakness due to financials, and right now, if we see the structure to the left that we got on Monday, the 12th of June, we can see that this structure is quite weak. This was the big push out of the range that we broke in early June. So we are now entering this range, and on the volume profile, this looks like single prints. So be careful with this kind of push, because we usually move higher, and if we retest this kind of value, there's a lot of probability to basically repair this to the lower side, and that would be 14,800. So if you want to be bullish, I want to be bullish, but I have to be patient. I will look for these levels around 14,825, 14,7075, things like that. Today, I'm not going to this is an active downtrend. So today I'm not looking for more longs. I try to scalp a little bit here, but there's nothing for me today there's no setup for me. So if you want to continue being bullish, I think your best opportunity is just to see how we end up today, closing, and see if the fib retracement, to see if this upper value of the range that we broke is hold. Tomorrow, let's see the calendar. Tomorrow we don't have big, well, we have some things. For example, we have the Case-Shiller home price, consumer confidence, new home sales, services revenue, and services index. This is quite important because services, as you know, the CPI and the core CPI, inflation is not going down as everyone's expecting, because services is remaining sticky, inflation in the service sector. So everything, Richmond Fed Manufacturing Services Index, Dallas Fed Services Index, we should see lower indexes, lower revenues on the services to really continue seeing a progress to the downside on this services index, and most probable this will impact core CPI and the services inflation to the downside. So we need to see, wherever we see services, we need to see lower than expected or expected into the negative services. If we check for Wednesday, on Wednesday we have Powell right at the open speaking, and 1 hour or 2 hours before the open we have the NBA 30-year mortgage. So until then, I think today there's no way I'm willing to basically take any long positions, any further positions. So I will wait for tomorrow. Let's see if we gap down, if we gap up. How we close today is quite important to really set the sentiment for the week, until Powell really provides more information regarding the projections and what Fed is seeing on these numbers. Tomorrow we got some economic data, but be really careful in this market, because everyone is waiting for this pullback to really continue higher. But right now, I don't see a lot of bids and a lot of people trying to buy this pullback yet. I think we have to be patient to really set up some nice levels in terms of risk versus reward. And I think this level around 14,800 converges quite well on the daily for the fib retracement. On this day, the day when we broke out of this range, and is the opening print around, it's basically almost 14,800 flat. And that would be the plan. If you want to be bullish, you have to be patient. If you want to be bearish, if you want to be a bear and you want to short this market, I think your best opportunity is to be even more patient and to wait for something like this. You want to see a retracement to the fib. That will be your first step. And then you want to see a rejection of last week high to really continue building on the 2 hour and on the higher time frames, lower highs. This was the descending triangle that is resolving. but the trading day is not over yet. We really have to see how we close today. But for now, I think sellers are in control intraday, and bulls have to really be patient and don't buy the knife. Don't buy every dip. Just wait for good setups, risk-reward ratios, and I think we need to wait a little bit more, let it bleed, and let's see what happens around that area. I will be watching, and I'm sure I will not be the only one watching these levels. So that's all from my side. I hope this video was useful for you, and if it was, please click the like button and subscribe to the channel, because I upload videos every single day for market forecast, market updates, and market recaps like this one. I appreciate your time as always. Remember that the trading day is not over yet. We are seeing weakness across the board on all the Nasdaq minus 1.11. So be real careful. S&P is not as red as the Nasdaq, but it's for sure seeing an active trend lower. Take your gains if you have today, because anything can happen. There's a lot of people waiting for this pullback. And I think investors are waiting for really nice levels, not up here. So they will be watching the levels that I mentioned. And let's see what happens at these levels, because they are quite important. So discipline, risk management, all those two skills are really key for your success on these markets. Stay safe, everyone, and see you tomorrow.